What a day it was yesterday. Mesmerizing as it may be. Started off on a somber note, and then that 3 o'clock move came actually a little bit before that, and we pulled up all the way to 26,200. You gotta rub your eyes in disbelief with the pace at which the markets have been moving up.
You know, Aisha, I've stopped rubbing my eyes now. Just look at the pace of the market appreciation, and we are looking at large cap stocks here. We are sitting comfortably above 26,000. In the September, I mean, we're talking about the September expiry data here. Nifty added 4%, August was 3%, July was 1.5%, June was 7%. So we are looking at 4 months of straight line gains, so to speak, in the market right now. And whether it is the brute force of liquidity, whether it is global strength, the bottom line here is that the markets right now are in a good groove, and bulls simply cannot put a foot wrong.
Oh yeah, absolutely. But look at the global markets. I mean, to be fair, we were actually part of a global move. Both Asia, European markets, US futures, while we were in that last 1 hour of a pull-up, they were all holding up very smartly. So we clearly joined the party. And in fact, to be honest, we were a little late at that, but we caught up quite fine. A bunch of economic data actually for the US equity markets as well. Of course, there is assurance which the investors got after the strength of the US economy. Initial jobless claims had fallen more than expected, indicating clearly a strong labor market. The final reading for the second quarter GDP as well came in at 3%, and 3% was pretty much the consensus print on the screen. So net result, you had another record for the S&P 500, for the Dow, and even the Nasdaq, which managed to extend their gains very, very smartly. About a 0.6% move pretty much across the board is what you saw, though the futures are a lot more tempered right now. But Asia is picking up steam from that. You've got Hong Kong, which is on a tear, almost a 3% notch up, and Shanghai, ever since those PBOC measures, that market has really been on a tizzy, rubbing off on HK. Shanghai as well trading higher by about almost 1%. The other thing, of course, is the commentary coming in from OPEC. They're not talking about any specific target for crude, and they said that they can abandon now the unofficial $100 per barrel target. Crude currently at 70, 71 thereabouts.
So Aisha, in last 15 days, what are the 3 changes which have happened? Number 1, if you frankly ask me, is this entire narrative which was centered around Fed, that only has got cemented that growth is back, growth is not bad, and Fed is cutting rates, which means we are in a Goldilocks scenario. And US markets, after the Fed, at least global markets, they've made a new high. So the so-called market strength continues. Second big change is the stimulus which has come from China, and that is coming at a time when Chinese stocks are at a multi-year low, and that is having a rub-off effect on metal prices. And third is the communication from OPEC, which means that it definitely means that oil prices, the natural direction for oil prices in the near term, I think is headed lower. Now, all these factors currently are going to benefit India, because the Fed has cut rates, money will move back into emerging markets. We've been talking about this, that the FI FOMO, the FOMO effect in FIs is at play. That is visible in the way how flows have moved in the month of September. Second, a stimulus from China, and that is having impact on metal demand per se, which indirectly is good news also for India, and especially for metal dominated stocks. And third is OPEC. What you don't want is that when rates are coming down, when China is stimulating the economy, crude to also spiral up, which is not happening. So again, this is like a picture perfect scenario for India. Abundant liquidity, strong global support, FIs are back with a bang, and then crude is directionally going lower. Now these are the perfect pillars on which any market would rally. So if you really look at markets, it is more than news, and it is news which in a sense is really driving stock prices higher. So Aisha, it's not that okay, markets are going up because of unnecessary reason. We look at a market and we say, okay, 26,000 on the Nifty, by Dow be 42,000 per year.
Yeah.
Let's not lose sight of that.
Yeah.
Markets are going higher because flows are coming, and flows are coming because macros are changing, and macros are helping because of oil. So there is a lot of news push, a lot of macro push. I don't think you can just say, oh, this is mad participation and there is a bubble and a trouble here. No. If markets would have gone up without any news, without global support, without improvement in macro, without a drop in dollar index or the crude index, then I would have said, look, this is bubble and trouble. Right now, the market rally, we can argue about the quantum, I think is it is well defined and it is well articulated. It can be articulated with what is happening in global markets.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.